What if the most financially dangerous thing you can do in 2026 is exactly what society told you was the safest? Get a stable job, work full-time, collect a monthly paycheck. For decades, that formula created stability. But quietly, something has changed, and many people in the United States and Europe are starting to feel it, even if they can't fully explain why. You can work harder than ever, earn more than your parents did at the same age, and still feel financially fragile. Not poor, but one unexpected event away from serious stress. And the uncomfortable question is this: how did something designed to create security start creating risk? Relatable scenario. Imagine someone named Daniel. Daniel is 29 and lives in a mid-sized American city. He did everything correctly. He finished college, he found a stable job in marketing, his salary is $68,000 a year. Sounds respectable, but after taxes, health insurance, and retirement deductions, Daniel actually takes home about $3,900 per month. Now look at where that money goes. Rent for a one-bedroom apartment, $1,600. Car payment and insurance, $620. Student loan payment, $350. Groceries, utilities, phone, subscriptions, around $700. Gas and transportation, about $200. Credit card minimum payments, $180. Just like that, Daniel's fixed expenses reach about $3,650 per month, which leaves him with roughly $250 of breathing room. $250. That's not wealth. That's margin for error. And when people talk about financial stress today, this is what they mean. Not poverty. Just very little room for anything to go wrong. Now here's the deeper issue most people miss. Daniel believes his job is safe because his salary is stable, but his expenses are not. Rent rises every year. Insurance rises every year. Groceries fluctuate. Interest rates change. Taxes shift. Healthcare costs climb. But his salary? That moves slowly, if it moves at all. Maybe 3% raises, maybe 4%. Meanwhile, many core expenses have been rising faster than that for years. This creates something subtle but powerful, a shrinking financial buffer. The job feels stable, but the financial system around it is not. Simple dollar math. Let's do a simple 5-year example. Daniel's rent increases by just $120 per year. After 5 years, that's $600 more per month. His car insurance rises $20 a year. Groceries increase maybe $50 over time. Utilities creep upward. Without doing anything irresponsible, his monthly cost of living quietly grows by $800 to $1,000. But his salary? If he receives a 3% annual raise on $68,000, after 5 years he earns around $78,800. After taxes, that might increase his monthly take-home pay by about $450. So expenses rose about $900, income rose about $450. That gap doesn't appear overnight. It grows slowly, quietly, until one day the math simply stops working. So why do smart people walk into this situation? Because stable jobs create a very powerful psychological illusion. Predictability feels like safety. A paycheck arrives every 2 weeks. Bills are automated. Life feels under control. But human psychology is extremely sensitive to short-term stability. We tend to ignore slow structural change. It's similar to how people barely notice inflation year to year, even though the long-term impact is enormous. Another factor is social pressure. In the US and Europe, stable employment carries an identity. You're responsible, reliable, successful. And with that identity comes lifestyle expectations. A nicer apartment, a finance car, vacations, subscription services, comfort upgrades. None of these decisions feel reckless. Individually, they're small, but collectively, they lock income and expenses into a tight loop. The job supports the lifestyle, and the lifestyle requires the job. Why this becomes risky in 2026. 20 or 30 years ago, this system worked better. Housing was cheaper relative to income, healthcare costs were lower, debt burdens were smaller, and careers were often more predictable. Today, the equation is more fragile. Companies restructure faster, industries change faster, technology replaces roles faster, and economic shocks travel globally within weeks. So the risk is no longer just losing the job. The risk is realizing that the job was the only pillar holding everything up. Perspective shift. How financially intelligent people think. Financially aware people don't necessarily earn dramatically more. What they do differently is how they interpret stability. Instead of asking, "Is my job secure?" they ask a different question. How dependent is my life on this one income source? The goal isn't quitting jobs or chasing unrealistic entrepreneurship. It's simply understanding that true financial stability comes from flexibility. Flexibility in spending, flexibility in income, flexibility in lifestyle expectations. The financially calm people you meet often share one invisible trait. Their monthly life cost is less than their identity requires, which means if something changes, they still have options. Closing reflection. Stable jobs are not the enemy. They still provide structure, income, and opportunity. But in 2026, the real risk is believing that a stable paycheck automatically equals financial safety. Because stability today is less about where your income comes from and more about how much pressure your life puts on that income. And once you start seeing money through that lens, the entire financial system starts to look a little different.